If the global economy collapsed tomorrow, what would you trust more? A bar of gold or a digital key to your Bitcoin wallet? For centuries, gold has been the world's ultimate store of value. But now, Bitcoin is emerging as a new age competitor. So which one is truly better as a hedge? Let's explore in detail. What is a hedge? In finance, a hedge is a strategy or asset used to protect your portfolio against risk, whether it's inflation, currency devaluation, or geopolitical turmoil. A good hedge doesn't just grow in value. It holds strong when everything else falls apart. Gold has traditionally filled that role. But can Bitcoin do the same? Why gold has always been the standard? Gold has been trusted for over 5,000 years. It's rare, tangible, and universally accepted. It doesn't rust. It can't be hacked. It doesn't rely on electricity. In times of war, hyperinflation, or crisis, gold has historically surged. Even central banks across the globe hold gold reserves, currently over 35,000 metric tons worldwide. Gold is also relatively stable. It moves slowly but predictably. However, gold has downsides. It's heavy and hard to transport. It doesn't generate income. It's not easily divisible or digitized. Still, for the traditional investor, gold remains the most trusted hedge asset on Earth. The case for Bitcoin: digital gold or digital gamble. Bitcoin was born in 2009 during the global financial crisis. With a maximum supply of 21 million coins, Bitcoin was designed to be deflationary, unlike fiat currencies that governments print at will. It is decentralized, censorship-resistant, borderless, and can be stored and transferred without any institution involved. Supporters call it digital gold because, like gold, it's scarce and can act as a hedge against monetary debasement. Between 2015 and 2021, Bitcoin delivered astronomical returns, rising over 10,000% in just a few years. But it also suffered dramatic crashes, falling over 70% during bear markets. Bitcoin is still young. Its legal status varies. Some nations embrace it, others ban it. And it relies entirely on digital infrastructure. No internet, no access. So is it a reliable hedge or a speculative risk? Head-to-head comparison: Bitcoin versus gold. Let's compare both assets across key dimensions. 1. Scarcity. Gold, finite but not capped. New mines can add supply. Bitcoin, hard-capped at 21 million coins. No more will ever exist. 2. Portability. Gold, physical, heavy, hard to move. Chem's Bitcoin can be transferred globally in minutes via internet. 3. Security. Gold, secure but vulnerable to theft or seizure. Bitcoin, digital keys secure, but also hackable if not stored properly. 4. Volatility. And gold, low volatility, stable, long-term price behavior. And is Bitcoin extremely volatile? High upside, high downside. 5. Adoption. Gold, universally accepted, recognized in all economies. Bitcoin growing, but regulatory uncertainty remains. 6. Liquidity. Both are highly liquid, but Bitcoin trades 24/7 globally. 7. Historical trust. And gold, 5,000 plus years of proven value. Bitcoin just over 15 years old. Real-world stress tests. Let's examine how these assets performed in recent crises. 2008 financial crisis. And gold surged 25% while stocks collapsed. Bitcoin did not exist yet. And COVID-19 pandemic 2020. Governments printed trillions. Gold rose from $400 to over $2,000. Bitcoin exploded from $5,000 to over $60,000 in under 18 months. 22 inflation spike. And gold remained flat. Bitcoin crashed 70%. Yet Russia-Ukraine conflict. And gold spiked as war began. Bitcoin initially dropped, then recovered. Conclusion: both assets respond differently depending on the crisis type. Gold is stable in geopolitical turmoil. Bitcoin reacts strongly to monetary policy shifts and risk appetite. Investor behavior, generational divide. Interestingly, age plays a role. Older investors lean heavily toward gold. Younger generations, especially millennials and Gen Z, are much more open to Bitcoin. A 2023 Fidelity survey found that over 50% of investors under 40 prefer digital assets as their hedge. But is preference the same as protection? Should you choose one or both? The truth is, you don't need to choose. Many modern investors are turning to diversification. Hold gold for stability, trust, and geopolitical defense. Hold Bitcoin for innovation, upside, and monetary independence. Some portfolio strategies now recommend 5 to 15% combined allocation to hedge assets, split between gold and Bitcoin. Ray Dalio, founder of Bridgewater Associates, has stated that cash is trash and that a diversified store of value is key in this economic era. Conclusion: which is the better hedge in 2025? If you're seeking long-term historical trust, universal acceptance, and slow, steady preservation, gold is your answer. If you believe in digital disruption, limited supply, and monetary evolution, Bitcoin is your bet. But the smartest strategy may be holding both. In an unpredictable world, diversification isn't optional. It's essential. Which asset do you trust more? Let us know in the comments. Are you Team Gold, Team Bitcoin, or both? And don't forget to subscribe for more global financial insights with FinSight Global. Your wealth deserves a strategy.